Canada does not have an LLC. And in the US, if you're a Canadian who tries to set up an LLC, you will likely suffer double taxation. If you have, let's say, under $200,000 worth, you can supplement your own income if you own it personally by cashing out slowly over time and taking it as capital gain. So if you're in your job and you make, 60 or 70,000 a year, and you're paying tax on that, and then you want to take a vacation or something or buy a nice thing, you can cash out 10, 20,000 in your crypto. So you cash that personally over time. If you did that through a corporation, then it would get taxed inside the corporation first. And then when you take it out, depending on how you take it out, as a dividend or as a draw or something else, you would get taxed again personally on the difference in the tax that was paid by the corp and what you're paying personally. But there's also the variable of when are you cashing out? Because we know that the markets are very volatile, right? So what some people do is they'll move some of their crypto into the corporation, like 75% of it, and then 25% keep in your name personally. And that 25% you can cash out over time. But if you find there's like a strike price where you feel like, oh, it's spiked and it's not going up from here and it's probably going to crash, you can cash it out inside the corporation, which will pay a lower rate of tax, and then wait until a later date to take it out of the corporation. It's very fact specific, and it's about planning. It's about planning. So here's another thing. If you have a job that is an independent contractor type of job, or you own your own business and you're incorporated, you can retain the earnings from your job inside that corporation until a time when you want to cash out your crypto. I guess it gives you the option of not taking personal income if you want to live off your capital gains. So if normally you draw from your personal corporation 60 or 70,000 a year to live off of, but you own some crypto personal, what you can do is in a year where you feel like, oh, we're going to, like let's say it's January, February, and the crypto prices spiked, don't take anything out of your corporation. Leave it in the corporation and then start cashing out crypto. So being an independent contractor or owning your own business that's incorporated can work to your advantage at that point. Two different buckets is often how we describe it. You have the bucket from work and the bucket from crypto. And if you want to dip into your work bucket, you can, or you can leave it in there and then cash out your crypto slowly over time, and you'll pay very little tax if you do that. Or you can supplement one with the other, like we just described. You take your income from work and then maybe cash out a little bit of crypto. A lot of people get information from the United States where there are different types of business structures and business entities. So I'm just going to break that down for everyone now. We're going to talk more about cross-border structuring in a future episode. But just to be clear, there are no LLCs that you can do in Canada. Canada does not have an LLC. And in the US, if you're a Canadian who tries to set up an LLC, you will likely suffer double taxation. So I'm going to explain what that means. So in the United States, they have two different types of corporations. They have what's called an S Corp, which is a flow-through entity, and a C Corp, which is like its own person. It's like its own entity. So partnership can be between corporations or between individuals or a combination of the two. The individuals, though, pay the tax. It's a flow-through. Okay, an LLC, which is not available in Canada, it's only available in the US, is a combination of the two. It's an entity with limited liability. So if you sue a partnership, you're actually suing the partners. If you sue a corporation, you're suing the corporation. So the shareholders are insulated from liability. In an LLC, you sue that entity, it absorbs the liability, but it doesn't pay the tax. The shareholders pay the tax. It's a flow-through. Okay. Now, Canada does not recognize LLCs, which means if you set one up in the US, you get taxed at the personal level as the individual, and then you'll get taxed again in Canada. So it's kind of a double taxation problem. Because in the US, it's designed to be a flow through, Canada doesn't recognize it. it sees it as an entity. So you get taxed there and then taxed at the individual level. So flow through, just to clarify, is like a conduit. A family trust is a good example. You want to use that to flow revenue to other people. You don't want it to stay in one thing. You don't want it to stay in the trust. You don't want it to stay in the partnership, and it doesn't stay in the partnership. It just goes down to the partners. Partnership is not an entity. That's what I mean when I say it's not an entity. It's a conduit. You want to make sure that if you're setting up a corporation, we want to not trigger any tax by moving the crypto that you own into the corporation. In Canada, if you can't gift capital property,
Right.
and you can't just, if you dispose of capital property, you're deemed to have disposed it at fair market value, which means if it went up in value at any point since you bought it, you have to pay tax on that gain, even if you didn't receive any money. If you try to just transfer the crypto into the corporation, you're going to pay tax on the gain, whether you received any money or not. But there's a good way to defer that. There's an exception called a rollover in the Income Tax Act that allows you to roll over your assets into the corporation in exchange for shares of equal value. And that freezes the value in those shares, and that defers that tax consequence pretty much indefinitely in this type of corporation, because it's really until you sell the corporation. In this case, you don't really sell these types of corporations. So, what you've done is you've sidestepped any tax liability there. What you're doing is you're trading the cryptocurrency for shares. And stay tuned for a deep dive into best practices for Canadians to use when managing digital assets.